So this is the pound dollar analysis for Friday the 10th of November. Now let's have a quick look at what happened with prices here on the 9th. Well, what happened on the 9th of November. So we're just going to grab the pen and just have a look at what's happened over the more recently with prices. So we came up to this zone. We've got a 400 period average here in black, the 200 period average here in blue. Came up into this zone. We saw some selling momentum first there and there also. Had a bit of a little top in prices in around that 400 period average. Now we broke below these lows and we came down into this weekly pivot at 30.93, which has been identified for a couple of weeks now. If this is not your first time watching an analysis video done by myself, and we've got this major this major level as well in around at 31.47, again identified for several weeks now. So we've come down into so on the 8th into the 9th, we've come down to 30.93. 30.93 is held. We've come all the way up to the top of all the way up to 31.47, which is a very strong level, and we've seen some selling momentum take us all the way back down to 30.93, which we found support again, and we've come back up to test this 31.47. So it's pretty clear. I don't have to explain. We're pretty range bound at present over the past 2 or so days. We've had the lower end of the range being at 30.93, the weekly pivot, and over the top of the end of the range, we've got 31.47, which is a major level. So in light of the most recent trend, we've had a bit of a double bottom there, slight double top at the present. So we do look poised. If this bearish momentum continued, again, we'll be looking at 30.93 for possible buy side momentum. But let's just see. Now, if we do have these candles, we are operating outside market hours, so we do have to exercise a degree of caution, because what we have seen is so we've seen some selling momentum off the 200 period average, and again off the 200 period average here. The 200 period average is slightly sloping downwards, so it is coming down to this level. So prices are being squeezed at present. Now let's just have a look at the resolution. So say if we do continue to have these small candles here, not similar to the ones here on the left, we could potentially see a bull flag form here. Now if we do see these small candles and we do see a bullish candle, sizable bullish candle indicating an end to the overall bearishness of the market, these small candles with the small bodies are indicating somewhat of a lack of downside momentum. These candles to the left here, we did see some. Their size indicated that there was some strong buying momentum, and the fact that they were closing near their highs also indicated there was momentum. Similar to these two candles here over here on the short side, very strong candles closing near their lows, indicating strong selling momentum. Now these candles are pretty small in comparison to the ones I identified, and so we do. Usually when we do see these, we have a bit of a turnaround in prices, but we do see candles with small bodies, not showing much resolution to counter to the trend. We usually probably see it's usually a pullback before a continuation. So what do I expect price to do? So continuation. So we might go back for another retest of this double confluence here of the 200 and 400 period average, just to see where we are. So if we come up to the 200 400 period average and it does hold, we'll definitely be targeting 30.93. If however we do see the consolidation retracement, possibly all the way back down to 20 period moving average, then we get some strong buy side momentum clearing this 31.47. We look for prices to trade above and we'd see our price react to the moving average. If we do trade above it, then we'll be targeting levels. Oh my gosh, like the very next major level is at 32.81. But if prices were to get up to 32.81, it would negate all the bearishness of the Bank of England press conference and dovish rate hike. So it would negate all of this bearish move over here on the left of the chart. So let's just have a look. Let's just see where we are. I'm just gonna bear with me a second here. I'm just going to zoom out a little bit here. Let's see where we are, because it is a pretty sizable zone. It's wow. It's over 100 pips actually. It's about 130 pips. It's about 130 pips this zone here from this 31.47 to 32.81. So we might see some selling momentum coming in around 32.20 actually. So 32.20 in around this 32.20. But again, this 32.20 we do seem we'd pretty much be at the open of the news related candle, which was interpreted as being bearish for the market. So, but if we do see that resolution and that we do trade above it, we'll be targeting 32.20 potentially to see if we do see some retracements or weakness in the market for a possible retest of 31.47. If we do break above 32.20 and hold that level, we'll be targeting 32.81 to the upside, above which we'll be looking at 33.04. I can't imagine prices getting all the way up to 32.81 here on Friday, or on all the way up to 33.04. Now, if we do break down to the downside, again, we'll be targeting 30.93. If we do if we do break below 30.93, we'll be possibly targeting this level just down here at 30.40. We're trading pretty close to 31.47, so it's about 100 points or so. So 100 to the downside. Again, we'll be looking to target these lows over here on the left of the chart, so 30.40, and below which we'll be looking for 30.27 as well. If we do break below 30.40, can't anticipate price getting much below 30.27 here on the 9th of November, but below 30.27, we'll be looking for the major round number in around at 130 level if we were to break below 30.40 and 30.27. So let's just have a look at the higher time frames before wrapping up this analysis here. So we're going to have a look at the daily chart. So on the daily chart, let's just get scaling on here correct, and oh my word, on this daily chart we look pretty range bound at present. So we've got lower end of the range there, and we've got the upper end of the range. So lower end of the range is in around at 30, well, essentially around at 30.50 really. We've briefly broke below, so let's see, 30.93 being similar to the midpoint of the range, but lower end of the range more recently has been let's just get that on the chart correct, in around that 30.50 level. We've seen the lower end of the zone, and the upper end of the zone is in around that 32.81 level. So markets, especially over the past couple of, well, since pretty much October, has been range bound. So we're likely waiting for a catalyst to see a break of the range. Now we do expect the Federal Reserve to raise interest rates, and that may prove to be the catalyst needed to break out of the range. Now we are trading near the lower end of the range, and we're operating in the shadow of this very strong bearish candle, which was news related. It was the Bank of England's interest rate decision, which was determined as being dovish. So we do exercise a degree of caution in our long bias trades. So let's just have a look at the weekly time frame before wrapping up here. On the weekly time frame, again, we've seen this more recently. Even though we've been in an uptrend, we've seen a pretty strong retracement downwards. We're trading back above the 20-period moving average at present, but we've seen a consistent selling in the market. So overall, we are in an uptrend, but the most recent trend is to the downside. So that should wrap up the pound dollar analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.